Everyone wants the magic setup. So today I'll be showing you mine. No indicators, just pure price action. I'll walk you through the live session from entry to exit with my full thought process in real time. I'll be taking you through a couple of trades on my watch list, and I'll also be showing you some trades I've taken in recent times. So this video is going to take on the style of a documentary approach so that if I lose in the long run, you will see it, and if I win, you will see it as well. I'll be showing you my entries and exit criteria so that once we enter into these trades, you know that we have actually entered for good. Once the trade has given us the nudge to enter, we'll enter them. This is Kojak's Pro Trading. Now let's get into it. So the first pair we'll be looking at on our watch list is GBP USD. So this is GBP USD. Now GBP USD, guys, is bullish. Now this is just what my setup looks like on a normal day, and I'll just quickly explain what's happening here. But before I do that, let's see what I think about GBP USD and why I think it's bullish. You guys know that I'm a swing trader, and a swing trader takes lesser trades, in comparison with day trading. So I take lesser trades, but my trades, I tend to hold them for a longer time. And my bias usually comes from the higher time frames, like the higher time frame starting from the monthly. Then I scale down to the weekly and the daily, then take my trade entries on the 4-hourly. Now, looking at GBP USD, you can see clearly here that GBP USD has been bearish for a while before turning bullish. Now, this is my trend line here. Now, this trend line held GBP USD bearish for a whole lot. And the market now broke above it and retested it, stood on top of it right here, and has started to course to the upside. Now, if we go quickly to the weekly time frame, you will see that in its ascent to the upside, we had a level right here. Now, this was the level that the market went, met, and we had a trend line here. Now, this market was initially here, came down, here was sort of a supply region for GBP. So the market came down, tanked below, all in a bid to go and retest this long-standing bearish trend line. And the market came above and retested it. It gave us a trade. We took it to this side and took some profits. Now we can see clearly that we have a black line right here. This black line right here, guys, I usually use black lines for tentative key levels. So this black line is a weekly level that served initially as the neckline of a head and shoulder that saw the descent of GBP USD back in 2021. So this is the left shoulder here on the weekly time frame. This is the left shoulder, this is the head, and this is the right shoulder. So that's the neckline technically. And that's where price action says once the neckline is taken off, the market plumets. Now the market declines drastically after that. So after the neckline was broken, you can see that GBP USD fell. Now this market has come and met this neckline again. So that's why I took my first take profit there. So I'll show you the trade simulated about that. So immediately, this is the daily time frame. So what we now do in the daily is to align our current trend with the overall bias. So given that we're bullish on GBP USD, I only waited for the market to break above here. So the market broke above and came back to this zone, which is that weekly zone, which is the supply zone rather, I told you, retested it, gave a bullish engulfing candle off it, and then went up to the upside. Now GBP USD has broken the most recent high it's made, and not only has it broken the most recent high, it came and met that black line. So we are in the region of the black line now, like you can see here. So we had a full daily candle close above that black line, but that's not enough to warrant more trade entries. So what have I done so far on GBP USD? It's simple. So now that we know that we actually have a trend line that is monitoring our bias on GBP USD being bullish. Now this trend line has held the first time here, first touch and second touch. Now we've not had a third touch yet, but the market had reacted off this support area and has gone to meet the weekly level. So simply, what am I doing on GBP USD? If at this point you are thinking of selling GBP USD, please stop. Only be looking for buy opportunities on GSD, or better still, just stand on your hands, because currently GBP USD is at a vantage point between buying and selling. Why? Because it's kind of in between two tentative areas, this region. So the lower region being the last high that it broke, and then the upper region being this weekly trend line has broken above. Now it's now retracing back to the downside. Now these retracements, or what's commonly known as pullbacks, give us opportunity as traders to jump in again. So we are not scared of pullbacks. We are actually happy about pullbacks because it gives the market time to breathe and gives us traders the time or the opportunity to jump into more trades. Now I'll be only looking for more trades on GBP/USD now if we do convincingly sustain above this black line you're seeing here, which is the weekly level. So if price sustains above here and gives us our entry confirmation, my entry confirmation usually is either for our counter trend line break or bullish engulfing candle break convincingly, and there must be a kind of an alignment with market structure. So everything needs to align for me to actually take more trades on GBP/USD. So currently now, that's my take on GBP/USD. I'm bullish on GBP/USD, and if we do eventually have an entry kicked off, for GBP/USD, let's just calculate our pip count to the upside. So our pip count from here to the next key zone area is well over, so I'm just going to put it here. So I think I'm seeing, okay, this is just blocking my view. Okay, so that's over 450 pips. So I'm actually looking at tops of over 450 pips on GBP/USD to catch. But then it's not yet happened yet. Once the criteria, triggers off itself, once my setup has been triggered, then I'll enter into this trade. So that's it about GBP/USD. Now the next trade we'll be watching the next trade I'll be talking about on my watch list is gold. Now this is my gold trade. Now I did make a video earlier on about my bias on gold. Now, but gold has been bullish for a whole lot, for a long time now, and if you're trading, if you're watching gold closely, you will attest to that gold has been clear-cut bullish. But something remarkable has happened now on gold. On 3 occasions, okay, I'm just going to use this. Gold came to this last high it made here and chose not to break above it. Now, it tried on several occasions to do it. So this was the first attempt, it came down. This was the second attempt, it came down right to the downside. People thought it's time to start selling gold. No, it's not time to sell gold yet. So it now came for a third time to retest it, and still the level held gold. And now gold has come to meet this trend line. Now you see what I told you guys about drawing your trend lines. If you watched my video yesterday, how to actually plot your trend lines the correct way professionals do them, you have to just join 2 swings and join the wicks of the candles that you're using to align your trend line. So in this case now, this is gold. So this is the first wick and this is the second wick. I allowed it to run through. Now you've seen that gold on trail reactions has chosen not to break this support level, now turned resistance. So this is a resistance level. So gold has chosen not to break this resistance level and has now come to meet this trend line. So for me to flip my bias on gold, which is not something I am eager to do at the moment, because most times you should only trade in the direction of the overall trend. The overall trend on gold is bullish. But for me to flip my bias medium term on gold, I said this in my video yesterday, so I'm going to say it again. I'll only wait for gold to come and take out this level right here. And for emphasis sake, I'm going to use a different color for that. So I'm only going to wait for gold to come and take out this level right here. If gold is messing around with this trend line, like you can see here, it's dancing around this trend line, even though it eventually breaks this trend line, I will not flip my bias on gold immediately. But once we do eventually break it and then come all the way down to break this support area, then this is how I want to trade gold. My next level target will be my 100% replacement, and then all the way to the downside to this black line you can see here as well. So if you are looking at trading gold and jumping into a sell trade, it might be very premature, and don't do that. I'm not going to advise you to do that. But if you're looking at a bullish output for gold, well, you are very well in the same position with a lot of savvy traders, and all you need to do at this point is to watch. Just stand off your hands on gold to see exactly what gold is doing before you can take more trades on gold. Okay, now the next pair we'll be looking at is, let's go to watch list and see. We'll be talking about BTC now. So this is BTC, guys. What's happening on BTC? So I'll just take this off first. I'll take this one as well off. Just have a clean chart for BTC. So BTC haven't broke this previous high with this. BTC has been bullish, guys. It has been bullish. And not only been bullish, this is the monthly time frame. Just take a look at what has happened on BTC. That's why I don't want to flip my bias too quickly on BTC, because BTC is actually going to rally and rally to the upside. Currently, BTC is trading at $107,800 per coin. And what I'm seeing, BTC is well over ready to rally over $130,000 per coin. We even get to the region of $160,000 per coin. Now, why do I say this? Is because not only is BTC bullish, it's come on the monthly time frame to do this. It's come on the monthly time frame to create a reversal candlestick pattern on a major time frame like the monthly time frame. So this is the morning star pattern that has formed. You can see that clearly, guys. So this is a morning star pattern that has formed on BTC on the monthly time frame, which is a major time frame. Anyone trying to take a sell trade on BTC now, you're doing yourself a great disservice. As far as I'm concerned, BTC is bullish, and until certain criteria are met for a reversal, do not flip your bias from bullish to bearish on BTC just yet. This alone is very, very critical. When I see a candlestick pattern form on a higher time frame like the monthly time frame or the weekly time frame, I take it very serious. I take it very serious, because that is what is likely to trigger a lot of stop losses if you are not zoomed in to understand what's happening on the higher time frame. So you actually need to come out to see what's happening on the higher time frame, then understand why your trades are not kicking in if you are not trading in the direction of the higher time frame. So in this case now, this alone I've seen, I'm going to be very, very watchful on BTC. As far as I'm concerned, BTC is bullish. Now let's go to the next. Let's go down a time frame below. So this is the weekly time frame for Bitcoin. Now Bitcoin did make this high initially. So Bitcoin came and made this high. First attempt, it didn't break it. The second attempt, it came down below, and came down below to cause this pullback, and then it's started also to the upside, which is that same monthly level. Now it's come and tested this monthly level, and we have still not broken it. Okay, let's just go over to daily to see whether we've actually broken it, because I can see a lot of reactions are happening around there. Okay, so this is what it looks like on this. So I'll just adjust it like so to understand what's exactly happening. So this is it. We did break. All I'm waiting for BTC for me to take more trades. In fact, I'm just going to put it in simple terms. If BTC comes and breaks above this level right here, then BTC is going to keep on rallying to the upside. As a matter of fact, if I'm going to calculate this, let's see how we'll calculate this now. So this is a swing low to swing high. Yep. So this is swing low to swing high. I'm just going to use this tool right here. So this is basically X to A. I'll clone it. So this is like top level, this top level trading stuff, pro trading. So ABCD pattern. So you just simply say that A to B is going to be equal to C to D. So I've used these diagonal lines to demonstrate that if BTC does continue in this light, that means we are going to be coming somewhere around here. So this region, I'm just going to mark it out, and that's about 139, like I said. So that's about $139,000 per coin. So BTC is likely to come there simply because of this simple analogy: A to B is equal to C to D, and that analogy comes off swings, mostly swings used on the Fibonacci play. So that just pro trading stuff, and I decided to put it out there, and that's how I actually gauge in fresh markets where there are no previous data to guide us, through in our take profits and all that. I use these fundamental rules or fundamental laws of trading. A to B is equal to C to D, and our C to D on this case now D has landed on $139,000 per coin. So if Bitcoin now, so going back to current trading, if Bitcoin comes to break above this, the next level will be $139,000. So Bitcoin actually needs to surpass, is currently trading at $107,000 per coin. If Bitcoin comes to break $112,000 per coin, the next level for Bitcoin will be $139,000 per coin. You've heard it here. So that's my take on Bitcoin. Bitcoin is bullish, but currently there are no trade setups for Bitcoin. We might see in a few days. It could be in the next 2 days. I don't know when the market is going to kick off. I don't even know when there will be, like, whether there's going to be an upset about the setup we're waiting for. It happens all the time, but once our setup eventually triggers, that's where I'll be looking at Bitcoin, and that's how I want to trade Bitcoin. That's it on Bitcoin. The next pair we'll be looking at now is oil. I'm going to show you guys something remarkable on oil. So oil did initially give me the vibes of, shorting it, and that's when we broke below. So when price came here and gave us a full weekly candle, bearish candle close below this major zone, I was looking to short oil further. Oil might have only seen a decline to $55 per barrel, but I expected a further decline all the way down here to $43 per barrel. But for some strong trading, oil just rallied up again, and that's perfectly normal about oil, because oil is not typically a price action instrument, although it's mostly about 90 to 95% technical analysis driven, but we still have that 5% or slightly more that is fundamentally driven. So I wasn't surprised to see that oil spiked up again. But look at what I want to point out here, guys. If you've not watched my video on trend lines and the validity of trend lines when you draw them, if you draw them correctly as a professional, if you've not watched that video, you better go and do that now, because this stuff I'm about showing you on this oil trade is going to change your mind. Now watch this. This is the weekly time frame, and my trend line was drawn on the weekly. So this is the first week right here that was created. So that's the first touch of the trend line. Now this is the second touch of the trend line. And once you've had these two touches, like I specified in the video yesterday, you let your trend line run and don't touch it. Let it just run all into the future. Do not mess with it. Do not alter it. Now it's run all through into the future now, and see what exactly happened. I was waiting for it to come down. Oil instead spiked to the upside and did what? Came back to that trend line and respected it. This was a trend line that the first 2 points was drawn far back in 2022. That's over 3 years ago. Now the price of oil has come back and respected a level based on trend line that was, drawn 2 years ago. Actually 3 years ago. So this is insane, guys. This is to show you why you should use your tools properly. And that's what I'm here on this channel, to actually show you guys how to use your Forex trading tools and arsenal to your advantage, to use them the right way so that you can make excellent trading decisions when it comes to your trades and all that. So oil has come here, respected that zone, and tanked below. So we just go over to the daily time frame to see what exactly happened here. Oil reached there and gave this massive liquidity around this area and came back to the monthly level. So this place invariably has now become a supply region for oil. So that's just all I want to point out on oil. I still want to trade oil to the downside, but you see what has happened here. As oil came back above this monthly zone here, I quickly took off my mind from oil, because it just simply come back into a range. And if I go back to the weekly time frame, you will see that this entire area has been a range. So by the time oil came back above here, I was not interested in trading oil again. I'll only be interested in trading oil once it comes back below this monthly zone right here, like so, and then I'll be ready to short oil one more. On the flip side, if oil, because it's come and met this trend line and the trend line has rejected it accurately, if it did break above this trend line, then I'll now be looking at a possible medium-term flip in bias, but I'm not going to be trading. I won't have been taking trades anyway. I will wait. I will then employ my range trading or range break strategies to actually trade oil. The next trade we look at now is GBP JPY. So this is GBP JPY. For the monthly, GBP JPY has been bullish for a while now. So you've seen it clearly from this trend line. You can see here, this trend line was even properly drawn. Just ensure that this trend line was drawn correctly, because I pride myself in drawing accurate trend lines. So this is the trend line. Okay, so this is a trend line obeying those two touches. Yep, so this is the trend line for GBP JPY actually, and that's why I said GBP JPY is bullish, because on the monthly time frame we're seeing that we're having a bullish trend line. So what else will I be doing on the lower time frames, the weekly and the daily? I'll only be looking for bullish, bullish trades to take. Now, if we go to the weekly time frame, you can see that we've had a weekly candle break, right? So the previous week broke effectively above the monthly zone. So we had this bullish break above. So this gave me the inclination that GBP JPY is going to rise to the upside, and that's what we've been waiting for the longest time. Well, I've actually been waiting for GBP JPY creates to kick in so that I can take this trade to the upside. So how do I take this trade to the upside? All I'll be needing, so this is the daily time frame for you can see that I've used my rig simulation, my simulation tool right here. So this is the simulation tool right here, and I just clearly spelled out that the price needs to come back and retest this zone for me to take this trade to the upside. And mind you, these kind of trades, warrant that you have specific take profit levels before they get to your eventual take profit. And as a disclaimer, most of the trades here, if you are going to go ahead to take any of the trades I'm mentioning here, when they do kick in, please use proper risk management to go about them. Use proper risk management to go about them. And for this JPY trade, how I'm going to take these guys is this. It's simple. Now, this is the 4-hour time from where I usually take my entries. All I'll be waiting for is this, like this diagram I've just spelled. I'm just going to take that out. I'll be simply waiting for a very good pullback. The market has already begun to pull back. I need a pullback to this region. Once this pullback to this region has happened, and then most likely if it comes back to the region of the 50 pip area and rejects, it's not only going to reject on the 50 pip area, it has to reject on the 50 pip area. It also has to reject above this monthly zone, which the price is currently above at the moment. All I'll be waiting for is a counter trend line break or a structure break, like I mentioned initially when I started the video. I'll be able to take GBP JPY to the upside. So if this happens, it all depends on how the market presents. So if this happens, my first take profit will be this. So this previous level, my first take profit will be here, like you can see. Then my next take profits will be here. So I'm just going to use this. So this is going to be my TP1. Reduce this to 12. So that's going to be my TP1. And then this is going to be my, and then this is going to be my TP2. TP2. As easy as that. Then my overall TP. My overall TP is just going to be all the way. That's just how I take my GBP JPY trade all the way to the next monthly zone. So as we hitting each of my individual targets, I'm bringing my trades to break even, and I'm waiting for more pullbacks, adding more positions, bring my trades to break even, waiting for more pullbacks. That's how I trade, and that's how I'm able to catch. I'll be able to catch such a huge move. Now, there's so much potential in terms of pips for GBP JPY. Just like I showed you that GBP USD is about to make over 450 pips. Let's see what GBP JPY is going to make for us. So get the measuring tool. So from zone to zone, basically from zone to zone. So we have over 2,400 pips, guys. That's massive. 2,400 pips plus on GBP JPY, and that's what I mean. You can just use this particular pair and give a very sizable return on investments with your trading for this year, even if we still in the we still in the second half of the year, we just about to enter the second half of the year actually, you can use GBP and focus on it as a pair and get massive return on investment just by doing what? Stacking up positions, moving your trades to break even, having good risk management plan, and also you're following the trend. As easy as that. So my eyes are on JPY. Once these setups kick in, I'll be able to jump into this trade. So the next pair we're going to look at now is the S&P 500. Oh, the good old S&P 500. So this is the daily time frame for S&P 500. Okay, I'll just quickly, the monthly, everyone knows that S&P 500 is a running pair. It just shows the US economy is doing very well business-wise and company-wise and all that. So now look at the monthly time frame for the S&P 500. This is my trend line right here. So this is the trend line. This is the first touch and this is the second touch. Now the market came and had a third touch, but still, wicked all the way back to the monthly zone. That's fine, and it has gone back to the next monthly zone. Now if you look here, you will see clearly that this is the weekly time frame for the S&P 500. We've had a full weekly bullish candle close above this month. So what does that mean? It means the S&P 500 is going to keep rising. I mean, it doesn't say more than that. It's initially we had this first reaction here. The market came down, made a second attempt, made a third attempt, and then tanked down. Now, after tanking to the downside, you've seen that it's come on with this bullish momentum back to this monthly zone and has showed a strong bullish candle close above this. So what does it just simply mean? The S&P 500 is going to keep rising. And what do we do as traders? We anticipate more trading opportunities. You can just look at this. Just look at this. How many bullish candles do we see here? This is a 1, 2, 3, 4, 5. I mean, this is like a march past of bullish armies, all heading to the next target. What am I doing on S&P 500? Simple. I'll wait for, so this is it. I'll wait for, if you're not already on a trade, I don't expect you to be on a trade on S&P 500 unless you're not obviously seeing this level here. But if you're on a trade, that's fine. But if you're not in a trade, all I'll do, like I told you, is to wait for the market to still stretch quite a bit. I don't know exactly where it's going to get to, but then come back to give us a trading opportunity to the monthly zone. And then we'll just take it. Simple. That's my trading strategy. It's not complicated. Maybe later on, I'll let you guys on the strategy, but that's it. I'm still having a very bullish foresight for S&P 500, and S&P 500 is a pair that respects the Fibonacci area. It does that a lot, so most times you don't even wait for the counter trend line break on S&P 500 to jump in. Once it hits the 50 Fib area, you jump in straight up. So that's the S&P 500, and no trades yet for the S&P 500. So I did say initially that I'm going to show you some trades I took on Euro USD. I made a certain amount of money on Euro USD. I don't like to take my profits in terms of money, but maybe for this case I might just say it's kind of money. So what I'm going to do is I'm just going to place a screenshot of the trade I took on Euro USD here, and you will see the trade for yourself. I actually made over 3.5 mil on that trade, and that's from a paper trading account on TradingView. So this is just like I said, it's just a paper trading account, and as you can see here, I'll just go to my account history, and we made over 3.7 million on Euro USD. That was on the 2nd of June. That was 2nd this month, and we also added an extra 3.1 million on GBP card. So this is a paper trading account. It's a virtual account on TradingView. This is not my real account. My real account is obviously it's not going to carry this huge amount of balance. I use my real account to build my portfolio. I also use this one as well to build my portfolio, and this is the one I prefer to show and document most of my strategies. So that's it. And currently I'm floating, my equity is 160. I have floating 3.2 million. I've made over 6.8, and now I'm floating about 3.2. So that's just it. And I'll just show you, like I said, I'm just going to ensure I put a screenshot of the Euro USD trade I took. And the GBP USD trade I took, I also put a screenshot of it here as well. So that's it. So guys, those were the pairs I'm watching now, and they're my take on them. Marvelous trade entries we took in the last 2 months with good profits. I love trading using this swing approach because it gives me time to do other stuff whilst monitoring the charts. And when I do eventually take a trade, I don't need to stay stuck on my screen, monitoring trades. I just place them, put my hard stops and take profit levels, come in, from time to time just to see what the market is doing and eventually lock in profits whilst managing my position. And it's this method that has made me stay consistent and become very profitable. Like if you want more live sessions like this. Subscribe if you're serious about mastering trading. I'll see you in the next one.